Thank you for holding. Parties will be on a listen-only mode until the question and answer session of today's conference. At that time, you can press star 1 to ask a question. The conference is being recorded, and I'd like to introduce your speaker, Ms. Linda Abrazizi.
Thank you, and good afternoon for those of you joining on the East Coast. Good morning for those of you joining on the West Coast. Thank you for joining us for our third and last webinar in our Export-Import Bank webinar series called Competitive Financing for Your Foreign Buyers. I'm pleased to note that we have more than 28 people who are registered for this webinar. My name is Linda Abrazizi, and I'm a Senior International Trade Specialist for the Global Knowledge Center for Global Markets at the Department of Commerce. This webinar is being brought to you in cooperation by the Department of Commerce and Export-Import Bank. And I would like to welcome all participants in the export community who are joining us from all across the United States to learn about Export-Import Bank's financing to creditworthy international buyers in both public and private sectors. This webinar will cover medium-term insurance and loan guarantees for the sale of capital items. You will also learn about different industries the medium-term insurance covers, as well as long-term loan guarantees for transactions over $10 million. A question and answer session will follow after this presentation. Our speakers today will be Mr. Michael Jackson, who's the Director of the City and State Partners and Small Business Training for Export-Import Bank, and also Mr. Kyle Jackson, who's the Senior Loan Officer at Export-Import Bank. Now, for those of you who just joined, you can still log into this webinar by entering the URL website and passcode per instructions that were sent to you by email. And we do have a few housekeeping details to make sure everyone gets the most benefit from today's webinar. So you will be able to hear this presentation via your telephone and view it simultaneously via your computer. So if you're not hooked up through both, please take a moment to do this. And if you are experiencing any technical difficulties, please press star 0 anytime during this presentation. Now, we do invite you to type in questions on your screen as they occur to you during this presentation. There is a box at the upper left-hand side of your screen with the letters Q&A. You can type in your questions anytime during this presentation, and we will get to them for the webinar. And any questions that are not answered during this webinar due to time constraints, we will get back to you via a personal email. And also, just one more thing, we will take voice questions first. So if you do have a voice question during this webinar, please press star 1. So now I'd like to introduce live online Mr. Michael Jackson of Export-Import Bank in Washington, D.C. Michael, thank you very much for joining us.
Thank you, Linda, and thank all of you for joining the webinar today. Allow me to briefly introduce my colleague, Mr. Kyle Jackson. So Kyle has been with Ex-Im Bank for over 17 years now, worked in virtually all the areas of the bank, including the international business development, domestic business development. He's worked as a small business officer, a renewable energy officer, and as Linda mentioned earlier, now he's a senior loan officer within the bank's trade finance division, specifically the sovereign and long-term lending group. Kyle?
Thank you very much, Michael. Thank you, Linda. Again, I would like to thank everyone for joining us today. And as mentioned earlier, today we will be speaking about Ex-Im Bank's medium and long-term financing products. These products are specifically designed to finance international buyers procuring U.S. goods and services. The presentation itself will follow a fairly basic format. Nevertheless, I do encourage people to ask questions at the end, as it is possible there may be items I do not cover. Moving forward, the agenda of the presentation will be effectively the policies of the bank, followed then by the various financial products, and then effectively covering how do you apply to Ex-Im Bank. First, we're going to talk about Ex-Im Bank's general policies. Ex-Im Bank is a member of the Organization for Economic Cooperation and Development. This organization is an international organization upon which multiple agencies similar to Ex-Im Bank are a member. And one of the things the OECD works to establish is what we call a quote-unquote level playing field. That being that all the export credit agencies that are members of the OECD operate under the same rules and effectively, quote-unquote, creating a competitive environment for all exporters benefiting from export credit agency support. These rules include various things, such as the amount of the cash payment, the minimum interest rate a loan will have to carry if it's a direct loan from the agency itself, repayment terms, how the loan would be repaid, as well as when repayment of that loan will begin, and ultimately the exposure fee, that being the fee the Ex-Im Bank charges to undertake the risk in the transaction. Policies of the bank vary. We have what's called a foreign content policy, that being Ex-Im Bank itself, as a U.S. government agency, is mandated and tasked to support U.S. goods and services. Additionally, however, we do have financial products that can support what we call local costs. That would be costs incurred by an exporter and or foreign buyer to procure U.S. goods and install U.S. goods overseas. We also have policies relating to military, used equipment, and again, fees. U.S. content. As I mentioned previously, we are mandated to support U.S. goods and services. However, Ex-Im Bank does understand that in today's economy, it is very difficult to have products that are 100% manufactured in the United States. Therefore, our financial products do allow for a certain degree of what we coin eligible foreign content. Eligible foreign content is defined as any item that is manufactured overseas, brought into the United States, incorporated into a good manufactured in the United States, or exported out from the United States with other items that were manufactured in the United States. For example, if you were manufacturing a table per se, and the wood for that table was sourced from Canada, brought into the United States, and then fabricated in your facility into a table and exported out, the wood itself would be considered eligible foreign content, but the finished product would be U.S. because of the fabrication, the labor, and other goods that may have gone into its manufacturing in the United States. We allow for a percentage of up to 15% in eligible foreign content before the financing available through Ex-Im Bank would be impacted. Local cost financing. Ex-Im Bank recognizes that when you undertake projects overseas, there are often costs that are exclusive of U.S. goods and services. For instance, let's say you're manufacturing or selling a printer, and this is a specialized product that requires for both installation and commissioning. All right? Now, to the extent that when you ship the printer, you're not necessarily going to ship all the labor necessary to install the printer. So you may be responsible for hiring that labor overseas to install the printer, or perhaps you have an affiliate company that's a foreign-based subsidiary that is certified to undertake that work for you. However, the cost of that work is not necessarily U.S. It is actually foreign. We recognize this, and we effectively say that Ex-Im Bank will support up to 30% of what we call the net U.S. contract amount, and that is the full amount of goods as it leaves the United States in local cost. So if we take the example of our printer, if the printer costs $100 and we ship it overseas and we have to install it and commission it, Ex-Im Bank could finance an additional $30 in local cost support. Okay? And again, these are goods, these are services that are not sourced in the United States. They are sourced in the buyer's country, but effectively they are necessary for the project to move forward. Now, the eligibility requirements for local costs do vary slightly between the medium and long term. But the important thing to remember when we're thinking about local cost and thinking about perhaps your buyer may qualify for local cost is that the costs themselves must be associated for the project to move forward. Now, there are some restrictions on what the U.S. Ex-Im Bank can support. As I mentioned earlier, we do support U.S. goods and services. However, we are prohibited by law from supporting military goods and or goods destined for a military end user. There are, however, three exceptions. Three exceptions being humanitarian purposes, drug interdiction, and dual use. Humanitarian purposes would be, let's say that you had a Ministry of Defense that was purchasing medical equipment for a hospital they run in the rural area of their country. To that extent, given the fact that the hospital itself is being utilized to treat the civilian population and is for humanitarian reasons, we could support those sales. Drug interdiction is just what it says. Let's say that Colombia wishes to purchase U.S. helicopters to patrol the border to keep, obviously, the flow of drugs out. We could support Colombia in those procurements. Now, for drug interdiction, it is necessary to involve the U.S. State Department as well as other agencies of the U.S. government to get the appropriate certifications. Nevertheless, this is something we can do. And last but not least, in the military sphere, would be dual-use items. And again, these are items that are purchased by the military but have a predominant civilian application. A good example here would be radar sets. Again, let's say a Ministry of Defense overseas was purchasing radars that they would install in their air traffic control system to manage overflights and landings of civilian flights in their country. Even though it was the military of defense purchasing the radars, because their predominant application is for civilian use, they can be supported by Ex-Im Bank. Now, used and refurbished equipment. Ex-Im Bank has recognized again that there is a very large market for used and refurbished equipment, that being construction equipment, mining equipment, commercial trucking vehicles, trailers that are manufactured in the United States, utilized by U.S. companies for a period of time, and then effectively sold to aftermarket dealers that then identify buyers overseas to purchase these items. Ex-Im Bank is very supportive of this industry. However, we do have made some determinations that it's very important for used and refurbished equipment to meet certain eligibility requirements. Many goods that are manufactured have what's called a useful life, and that would be the point of time from the date of manufacturing to the point where that equipment has to go under a huge refurbishment or rehaul. In that instance, we determine what the remaining useful life is in an item to determine the amount of support available from Ex-Im Bank. When you file for an application at Ex-Im Bank and you're looking to finance used equipment, you will need to complete what's called a used equipment questionnaire. The questionnaire identifies various aspects of the equipment, including date of original manufacture, the amount of miles or hours of utilization, whether or not the equipment has been refurbished, whether or not the engines themselves have been redone, transmissions replaced. Based on that information, Ex-Im Bank would make a determination about the level of support available. We do ask that, of course, the equipment be manufactured in the United States, and also that it had not been previously exported for a period of no less than 1 year before you support Ex-Im Bank for support. Now, that completes the basic policies of the bank. There are several more, but that's a very good overview in terms of how the bank frames its financing. The next part of the presentation is going to cover what we call medium-term financing. Medium-term financing within Ex-Im Bank is defined as financing with a repayment amount not to exceed, a finance amount not to exceed $10 million and repayment period not to exceed 5 years. At Ex-Im Bank, we have 3 financial products that can support medium-term financing. The first one is what we call export credit insurance. The second is a loan guarantee, and the third being a direct loan. As I previously mentioned, our medium term, again, is $10 million maximum financing amount, not including fees or interest, and a repayment term of 5 years. In some instances, we will allow for the repayment term to go up to 7 years. As with all of our medium and long-term programs, the foreign buyer is required to put forth a 15% cash payment. It's very important to note that Ex-Im Bank does not finance 100% of the contract amount. We do require, as prescribed by the OECD, for all foreign buyers to put forth a 15% cash payment. That 15% can come from their own resources or they can finance it locally, but it would not be financed by Ex-Im Bank. However, the balance of the contract, up to 85% of value, would be financed by Ex-Im Bank, as well as any interest that a commercial bank may charge to make the loan. Medium-term insurance. Again, this is one of the 3 lending products available under our medium-term lending program. Medium-term insurance is the extension of credit made to a foreign buyer. That extension of credit will be made by a U.S. commercial lender utilizing an Ex-Im Bank insurance policy to support the procurement of U.S. goods and services. Okay? It is very important to note that with medium-term insurance, it is like insurance you would get for a car, your house, or any other item. It is conditional. Okay? The conditionality of that insurance is such that the policy itself must be adhered to in order to obviously make a claim against the bank in the event of a default. Now, for medium term, the typical insured parties under a medium term insurance would be a commercial lender, or should an exporter want to extend credit to its buyer, the exporter can come to Ex-Im Bank and file for insurance himself as well. However, predominantly, more than not, it is the lender that comes in and secures the insurance policy to support their loan to a foreign purchaser, again, procuring U.S. goods and services. We have designed our medium-term program to be, quote-unquote, document light. And what we're saying here is we are not trying to make the documentation overly difficult or cumbersome for the parties involved. Typically, we utilize existing documentation that is utilized in the commercial sphere as it stands today. That would be a promissory note, a copy of the invoice and the bill of lading, and an exporter certificate. Now, of those documents, a promissory note, invoice, and export's bill of lading, those are very common and utilized on a frequent basis both in commercial banking as well as within the export transaction. However, the export certificate is a document that is unique to Ex-Im Bank. As mentioned previously in the presentation, Ex-Im Bank is tasked with supporting U.S. goods and services. Therefore, in order to make sure that what we are supporting is of U.S. origin, we do require for the exporter to fill out a certificate validating that the goods and services that are being financed by Ex-Im Bank were originated in the United States. Now, medium-term guarantees is very similar to medium-term insurance. In fact, it functions almost identically in terms of documentation required and also in terms of application. The difference is, whereas insurance is a conditional product, again, Ex-Im Bank reserves the right to deny a claim should the insurance policy not been followed. For a medium-term guarantee, there is no conditionality to it. Effectively, when a bank comes in and secures a guarantee from Ex-Im Bank, if there is a claim, we advise the lender that we will pay on the claim regardless of why there was a claim or why there was a default in that case. Insurance is not that way. In the case of insurance, if the insured failed to secure an export bill of lading, or if the invoice was incorrectly filled out and the insured did not note this, then Ex-Im Bank could deny their claim. A guarantee, we do not have that conditionality. Now, what's important to note between a guarantee and insurance is that insurance is a cheaper product. Ex-Im Bank does charge a premium or an exposure fee for the services it provides the exporting community. Oftentimes, these fees are ultimately passed on to the foreign buyer. However, in terms of the amount you would pay or the foreign buyer would pay, insurance is cheaper. And so oftentimes it is utilized more than a guarantee for transactions where the commercial lender or the exporter is relatively comfortable with the buyer but may have some concerns with country risk. Now, back to the medium-term guarantee, there are some unique features that exist in the guarantee program. Again, it covers 100% of the principal and interest, up to 85% of the U.S. contract price. Under the guarantee format, as in under the insurance format, a commercial lender is making the loan with Ex-Im Bank's indemnification of support on the back end. So therefore, the interest rates that these loans typically carry are negotiated. Ex-Im Bank has no involvement in the negotiation of these interest rates between the commercial lender and the foreign buyer. However, given the fact that Ex-Im Bank is supporting the commercial lender in these endeavors, typically the interest rate is relatively low compared to what the interest rate may be should Ex-Im Bank not be participating in the transaction. Banks can securitize Ex-Im Bank transactions and place them on the securities market should they want. We also have the ability to lend in foreign currencies. We've been doing this for several years. We can lend in pesos. We can lend in euros. There are several other currencies that Ex-Im Bank can extend loans in. The full list of currencies is available on our website at www.exim.gov. The benefit to this, obviously, is if you have a buyer that is generating revenue in their local currency, and there may be challenges having to get dollars to pay back the Ex-Im Bank loan, then as long as they are in good standing, they can pay back the loan in their local currency. If there is a default, or if the buyer ultimately cannot make a payment, there is a provision that may have the loan switched to a dollar rate. But by this time, as an exporter, you've been cashed out of the transaction, and you're not carrying that foreign exchange risk. So this is something your buyer needs to be cognizant of should they want a local currency loan. The loan has the option to switch from a floating rate to a fixed rate. Again, this is more prevalent to the buyer in terms of whether or not they want to fix the rate of the loan. If they think maybe the floating rate is starting to increase, it's typically based on what's called LIBOR, London Interbank Offering Rate. That rate generally changes on a daily basis, and to that end, if they feel LIBOR is starting to escalate, they could fix the rate of their loan. Now, this is the primary guarantee documentation. Again, we're talking about medium-term guarantees. This also is relevant for long-term guarantees. You will note that we talked about credit agreements in terms of guarantees. Now, for that, we're really talking about for our long-term financing, which we'll speak about in a few seconds. For medium-term financing, ultimately, we're still talking about the bill of lading, the export certificate, the invoice, and the promissory note. Okay. Some of these other documents are not relevant for medium-term financing as far as in terms of the export's responsibilities. Again, we're going back to local cost financing. I think this is just simply to emphasize the fact that it is available under our medium-term financial products. Generally, for medium-term, to qualify for local cost, the foreign buyer must prove that they cannot finance these costs locally, whether it be their banks, whether it be that they don't have the internal resources to do for. They simply have to make a definitive statement to the bank advising that they are unable to finance these costs locally. And again, if they're incorporated to the U.S. export contract, or if our technical team has determined that these costs, or ultimately what these costs are supporting, are integral to the success of the project, assuming the buyer can qualify it through Ex-Im Bank, we would finance these costs for them. Next, we're going to be talking about Ex-Im Bank's long-term financing. So just as a recap, medium-term financing, once again, is defined as financing that has a financed amount not to exceed $10 million and a repayment term of 5 years, sometimes 7 years. For our long-term products, we have a loan guarantee and a direct loan product. We do not offer a long-term insurance policy. We've been through multiple discussions with various exporters and with U.S. lenders. We have been advised that there is no appetite for a long-term insurance policy. So therefore, we offer loan guarantees or direct loans. Now, something we didn't cover in medium term, but I think it's important to cover in long term, and we'll reference medium term as well, is repayment terms. How do we determine the repayment term of a loan? And there are two things to take into consideration. First, contract price. Okay? Contract price is a very critical element that we utilize to determine what the repayment of the loan will be. For anything up to 10 years, you're typically, again, looking at up to $10 million, you're looking at around 5 years. Anything in excess of that, you're looking at a repayment term of 5 years, 10 years, or perhaps up to 12 or 15 years if we're talking about a renewable energy project or some type of potable water project. The second factor to take into consideration is, again, we mentioned earlier, useful life of the equipment. If you were buying $10 million or $20 million of used equipment, and we determined that the useful life of that equipment did not exceed 3 years, irrespective of the contract price, we would only support a repayment term of 3 years, which clearly would put additional financial stress on the buyer. For long term, another consideration for repayment term is the category of the buyer's country. Category 1 is effectively the G7 nations, France, Germany, Great Britain, Japan. Any buyer in those countries generally would not qualify for a repayment term in excess of 5 years, regardless of contract price. However, for buyers in all other countries, we can consider much longer terms. A direct loan. You may remember that there was a direct loan mentioned on the medium-term guarantees. Admittedly, we do not do a lot of medium-term direct loans. We do a number of direct loans in the long-term arena. A direct loan is a loan made by Ex-Im Bank, made by the United States government to a foreign borrower to purchase U.S. goods and services. So unlike our guarantee in our insurance program, a direct loan does not necessarily require the participation of a commercial bank. All right. Generally, commercial banks do participate because oftentimes we utilize letters of credit for disbursements, and Ex-Im Bank does not have the ability to issue letters of credit. Nevertheless, from a structuring standpoint and from a pricing standpoint, the commercial bank does not play a very critical role because the loan can come directly from the United States. But we do encourage borrowers to bring in a commercial bank for the LC disbursement, so that they do play a very important role, but they're not critical for Ex-Im Bank's analysis of the credit and or our approval or distribution of funds at the early stages. I mentioned we do a lot of direct loans. One of the reasons we do a number of direct loans in long term is that it is a fixed rate financing. You may recall the OECD does govern the minimum interest rate that ECAs can charge. Ex-Im Bank charges rates based on Treasury plus appropriate spread depending upon the nature of the transaction. And additionally, we use direct loans to compete with foreign countries when they are offering what's called tied aid or concessionary financing. Concessionary financing is financing that is provided to foreign borrowers at the low market rates, at very low interest rates, very long repayment terms, just effectively very attractive rates. The tied element being that the money that is lent to the borrower must be spent in the donor country on their exporters to procure goods. So effectively ties that purchase back to the country providing the financing. The official position of the United States government is we do not like tied aid competition or tied aid financing, because we believe it is a disruptive factor to the market and oftentimes leads to what we consider to be unfair competitive practices of other countries. But when we are able to identify tied aid, and where possible, we will compete to provide a direct loan to effectively allow the U.S. exporter to compete with their foreign borrower, foreign competition. Again, local cost. The important part about local cost in terms of long-term, it simply needs to be an integral part to the product, to the project to succeed. You don't necessarily have to prove that you have financing for it. As long as the borrower qualifies under our credit criteria, we will finance it if it's related to the project. Who can apply here at Ex-Im Bank? And this comes down to the nature of the product you're looking to secure. For medium-term insurance, and that again would be our conditional insurance product, the exporter can provide. The exporter, if you want to provide financing on your own balance sheet to your foreign buyer, you can do that. You can come to Ex-Im Bank and secure a insurance policy to provide that financing. Or, we also encourage exporters, where possible, a lender can provide financing instead. Have the lender come in and actually provide the financing. And, we certainly want to discourage exporters from providing financing if that makes them more competitive. But we're also cognizant to the point that as an exporter, your core competency is providing a certain service or providing some goods. You don't necessarily provide financing, and you sometimes can overextend yourself in terms of administrative responsibilities if you are providing financing. And so, where possible, we do encourage you to bring a lender in to provide that financing. But again, exporters or lenders can apply for insurance. Ex-Im Bank has what's called a letter of interest product. Let's say that you're talking to a foreign buyer and they say, well, I'm really interested in purchasing from you, but I need some indication that financing would be available for me. Can you provide that? And the answer is yes, you can, through what we call the letter of interest. The letter of interest is a non-binding indicative term sheet provided by Ex-Im Bank. You can apply online, again, at www.exim.gov. And I think it's $50 to apply for this. And you would fill out some basic information: who your buyer is, what the ultimate contract amount is, what's being exported. And with that information, Ex-Im Bank performs minimum due diligence, but we will provide for you a term sheet that outlines the likely terms that Ex-Im Bank would be able to provide for your buyer, should they qualify at Ex-Im Bank. Anyone can apply for a letter of interest. We have no restrictions whatsoever on who can apply. We simply ask, obviously, whoever is applying for the letter of interest, have shall we say, have a role in the transaction if possible. That being, you are the exporter, perhaps you are a consultant working with the exporter, the buyer, but anyone can apply. Now, we also have what's called a preliminary commitment. This is very similar to a letter of interest in that it is Ex-Im Bank providing an indication of financing for a transaction, but it's being done before an export contract or an invoice or a pro forma invoice has been executed or signed. A preliminary commitment, though, goes into much greater detail than a letter of interest. It is actually, from Ex-Im Bank's perspective, we undertake a comprehensive evaluation of the request. This includes, we look at the buyer and the creditworthiness of the buyer. We do a technical and environmental assessment of the project. And ultimately, our board generally would look at the project to make a determination about whether or not Ex-Im Bank has appetite for this transaction. The PC itself, because of the fact that it is a much more comprehensive evaluation by the bank, while anyone can apply, there is a fee associated with applying for a PC. There is no fee for applying for medium-term insurance. There's only a $50 fee for applying for a letter of interest. But for a preliminary commitment, the fees can be fairly extensive because we want to make sure we have limited resources here at the bank. So we want to make sure that if we are being asked to take a comprehensive review of a project before an actual contract has been signed, we want to make sure that the parties engaged are competent and actually can undertake the project at a later time. Therefore, we do charge a fee of 1% up to $25,000 of the requested financed amount, and this fee would be due upon application. Anyone can apply for a PC. To be quite honest, we do not do a number of preliminary commitments. Oftentimes when people approach the bank and are looking for indication, the letter of interest is sufficient, but there are some instances where a preliminary commitment may be necessary. And so if you have questions on what those are, I encourage you to go to our website and take a look at that. And last but not least is what we call the final commitment. And this is the application you would fill out to apply for either a direct loan or for a comprehensive guarantee. And for this we do ask that either the borrower, the foreign borrower, or their mandated lender, the commercial lender that we provide the financing, we ask that they be the only two parties that apply. There's no fee, however, to apply for a final commitment. And the last slide I'd like to talk about today would be the special initiatives here at Ex-Im Bank, programs that we have unveiled over the years to help out U.S. exporters pursuing transactions overseas. The first one was called sub-sovereign risk. And what this means is, years ago when Ex-Im Bank would execute a transaction and we would lend money to the Republic of Cameroon, as an example, we would say we'll lend money to the Republic of Cameroon as long as the Cameroonian federal government guarantees that we are going to be repaid. So they would effectively have to commit what we call their sovereign authority to the transaction, and committing the full faith and credit of the country to ensure repayment back to Ex-Im Bank. But we found out that oftentimes exporters were negotiating perhaps not necessarily with the federal authority. It may be with a municipality or a state authority that was looking to secure a loan. And the federal government may say that, well, we are not going to guarantee that loan for the city. And we saw this in countries such as Brazil, where Rio de Janeiro and Sao Paulo wanted to borrow money to purchase U.S. exporters, but the federal government didn't want to support those purchases. However, those municipalities or those states were rated by the international rating agencies. Fitch and Standard & Poor's and Moody's had rated them because they had issued bonds on the international market. And given the fact that they did have a demonstrated experience of borrowing from the international markets and repaying those loans, we determined that we could actually go down to the sub-sovereign level, that we no longer had to look just at the central government to provide the guarantee for repayment, that we could, we're qualified to take the guarantee of the municipality or the state. And so this has been a very successful program when utilized in various countries throughout the world. Now, one constraint to this program is in some countries, they do not permit the underlying city or municipality to borrow without central government authority or approval. So to that end, there are some countries where the legal regime does not allow for those cities to borrow. Nevertheless, if that's not the case and they are rated or are looking to get rated, we certainly can entertain those transactions and see if we can provide support. We provide a significant amount of equipment financing as well. This is somewhat specialized in that there are certain types of equipment, such as medical equipment, that's being purchased by clinics, by hospitals, that may not necessarily have a track record of audited financial statements. Perhaps they were owned by the government, and the government spun them off, and they are now private sector. And even though that they're private sector and they have an established customer or patient base, they don't have financial statements for the last 3 years. In those circumstances, we can look at various things to determine creditworthiness. We can take a lien on the asset. We can look at future patient flow to the extent that they have historic records in terms of servicing certain regions for a period of time. We have what's called co-financing. I mentioned eligible foreign content earlier in the presentation. There's also something called ineligible foreign content. Ineligible foreign content are goods that are manufactured outside the United States that never come into U.S. borders. They're not brought into the United States to be exported out. They're exported directly from the manufacturing site to ultimately the borrower. This is called ineligible foreign content, and we won't finance that. We will not finance goods and services, again, that did not originate from the United States in some capacity. However, there are several projects that maybe logistically it doesn't make sense to bring an item from Europe back into the United States simply to export it back out to Africa. It makes more sense to export it directly from the manufacturing site in Europe to the buyer, the plant site in North Africa, and then obviously export goods out of the United States to the site as well. So what we've done to provide and maximize the level of support that we can provide U.S. export is does what's called co-financing. We will team up with other ECAs, whether they be Canadian, European, or Asian, and we will provide a single financial package to the borrower, but we are effectively being reinsured by the other ECA. So let's say you are, again, financing a large project overseas, and you're shipping some goods from Canada, and then you're shipping some goods from the United States. We will team up with the Canadian Export Credit Agency, where they provide insurance to Ex-Im Bank to cover their products, and then we will provide a single financial product, as I mentioned, to the buyer to purchase both the Canadian and the U.S. goods. This type of financing has been going on in Europe for several years. Ex-Im Bank is somewhat of a new entry for us. Over the last decade, we've been doing this because we realized that a lot of foreign borrowers, they didn't want to fill out two separate credit agreements or two separate promissory notes. They simply wanted to do one transaction and get what they wanted. And so this co-financing allows us to streamline the documentation that the borrower has to interface on, and then simply we engage the other ECAs on the back end. And it just maximizes the amount of support available to the U.S. exporter when they're shipping their goods. And last is environmental. Ex-Im Bank, as part of its charter, is mandated to support environmentally beneficial goods. Therefore, we have several enhancements for our products in terms of repayment terms and other policy considerations that we provide, when the goods that are being exported are environmentally beneficial. This would include solar power, obviously renewable energy, but it also includes potable water facilities. If you're building a water filtration plant that will help, small village, Again, let's say Cameroon, for example, we can provide some enhancements to help the financing, make the financing more attractive to the foreign borrower. So, with that, ladies and gentlemen, I thank you for your time, and that completes my presentation.
Thank you, Kyle, and thank you, Michael. We'll begin with our voice questions. Once again, if you have a voice question, please press *1. And also, as a reminder, you can still type in written questions under the Q&A tab that's on the left-hand side of your screen. And Kyle, with your great presentation, I wanted to know, is there a contact email that we can ask questions for? Is there a website that the audience can refer to?
Yes, there is actually. Depending on the nature of your question, there are several contacts. What I would encourage you, first and foremost, www.exim.gov. That's Exim Bank's website. It's a very good website. And we have various regional offices throughout the United States. And that the contact information is actually on our website. Depending upon where the exporter is located, they can contact their regional office, and any questions they have, I'm sure can be handled there. But if not, they're also free to contact Exim Bank directly. We have a 1-800 number, which
1-800-565-XM.
Yeah, 1-800-565-XM.
And if they hit option 2, they'll get to their closest regional office.
There you go, and they can contact that way. Absolutely.
Okay, thank you very much. So once again, if you have a voice question, please press *1. And also, if you have a written question, please go to the Q&A tab that's on the left-hand side of your screen and write it in, and we'll be able to answer them. So I'll start off with the voice questions with our operator.
Again, it's *1, and please record your name. And so far, I'm not showing any questions from the phone.
Okay, I do show some questions, written questions from our Q&A section, so I'll go ahead. This is from Alan DeWare. The question is the financing only for capital equipment, or can financing be secured for commodities produced in the USA as well?
Thank you, Alan. Thank you, Linda. The medium-term and long-term financing is only for capital equipment. However, Exim Bank has a number of short-term financial products that are utilized to provide commodities. Generally commodities are input stock. Oftentimes, we're talking about fuel, but we may also talk about agricultural products or other items that would be going into production for certain things overseas. But we do offer short-term financing for commodities. Terms range from the term itself is determined by the buyer's needs and also their manufacturing cycle. So we offer terms 30 days, 60 days, 90 days, 180 days. For agricultural commodities, we can provide up to 360 days. So we do have financing for commodities.
Great, Kyle, thank you. Next question I have here is from Eric Yanu. Are we able to get a transcript of this presentation? Well, we will provide everyone who's in our audience and all those who have paid, we will provide them with a net replay of this webinar, which is a recording, and we can also provide PowerPoint presentation slides. So we will provide that. If you want a transcript, we could provide you with that, but normally most people just, want the PowerPoints and the net replay, but we can definitely help you by giving you also a transcript if that helps you. So yes, we can also do that. And that is all the written questions we have. So once again, please take this opportunity to ask voice questions. We have our expert here, Kyle, who is the Senior Loan Officer for Export-Import Bank, and he is here and he's live. So please ask your questions now, because this is a great opportunity for you. So I'll give it to the operator. Once again, for those of you who have a voice question, please press *1.
There is a question. It's from Vamir Vegashev.
Hi, Vamir.
Hi.
Check your mute button.
Good morning, gents. I must have a question. You've mentioned that a foreign buyer should prove that he cannot finance his cost locally, right? And the question is, what proof do you need from the foreign buyer that he cannot finance its cost locally? It should be like, I don't know, some written evidence that he was denied in getting a loan or anything else, what can serve as an evidence?
Thank you for your question. Generally, a definitive statement from the foreign buyer is sufficient. I mean, it's important to note that, Ex-Im Bank, most of the markets Ex-Im Bank operates are markets that have challenging financial sectors. And so we understand that oftentimes, it's not so much the fact that they can't get financing, although that's the way it was phrased in the presentation. It's that the financing that they can obtain is not competitive or is not economically, desirable. Again, from an Ex-Im Bank perspective, we can finance transactions, in the medium term up to 5 years and the long term up to 10 years. But in many of the markets where we provide our financing, the local banks would only provide financing for 1 year or for 2 years. And so to the extent that if the buyer makes a definitive statement advising that they are unable to secure financing for 5 years, at a competitive interest rate, and that would be an interest rate that's not double digits, we would take that as sufficient evidence that local cost financial support is likely not available.
Thank you.
The next question is from Marcy Bauer.
Hi, how are you doing? I actually have 2 questions for you. The first one is, what type of guidelines is Ex-Im Bank using to establish creditworthiness for a foreign buyer?
Thank you for your question. We have put together what's called the medium-term credit standards, and these credit standards are available on our website, and they run through various kind of financial metrics the bank looks at to determine creditworthiness. They'll say, credit is more of an art than a science, so it's very difficult to determine, whether or not someone's going to repay back a loan. I mean, we've unfortunately experienced defaults where, the borrower met every single metric, but still was able to repay the loan, and then we've seen loans where the borrower missed 1 or 2 metrics, they've paid them all back. An example of things, we look at historic cash flows, we look at tangible net worth, we look at current debt stock with respect to both current as well as long-term debt. Those are the things we look at. We also look at in terms of, has the borrower or has the buyer undertaken loans of similar scope and size? Perhaps not from Ex-Im Bank and perhaps not from a commercial lender, but, have they borrowed locally, amounts that are similar or at least amounts that are more than a few $1,000s. I mean, when we're asked to support a transaction of $5 million, we certainly don't want to see that the borrower has only borrowed $10,000 in their entire life. I mean, there should be some credit history established, even if it's locally. And as part of our application requirement, we oftentimes ask for references. They can be supplier references, they can be bank references, but something that evidences that there is a borrowing history there. Ex-Im Bank's credit itself, I don't want to call it conservative, but clearly as effectively stewards of the U.S. taxpayer, it's very important that these loans be repaid. And so we do look at the borrower and we do apply some, I wouldn't say stringent, but we do want to make sure that they have the capacity to repay. So we are not there to provide loans to borrowers that have never borrowed before. I think that's the important thing. But if they have some credit experience, we will work with them. And more importantly, we have a wonderful track record of working with borrowers that could only borrow a few $1,000s on their first loan, but then they repaid that, and over years, they're now borrowing in the millions because their business has grown because they've worked with Ex-Im Bank and they paid back their Ex-Im Bank facilities.
Okay. Can there be some sort of average timeline, how long it might take for you to do a review on a medium-term request?
Yes. We have internal metrics to push through medium-term requests. In fact, we recently streamlined our approval processes to address timeline. I mean, to be candid, oftentimes Ex-Im Bank has been criticized for taking too long to approve a loan. But in the medium-term world, I understand that we are now approving loans within the 30 to 45-day period, if not less. One of the most important things when applying for medium-term financing is making sure that Ex-Im Bank has provided a complete application package. And again, our application guidelines are online. And more importantly, as I mentioned earlier, if you're thinking about helping your borrower apply, talk to our regional office, and or our regional office will have you talk to the loan officer to make sure that the package contains all the information that we need to undertake an analysis of the credit. The more complete the package, the faster the turnaround.
Okay. And I had one last question that doesn't really pertain to this presentation, but is Ex-Im Bank still offering the 3-day workshop for exporters?
I do understand that we are still offering a workshop. I also know we're doing some road shows. I'm going to call my colleague Michael to address that quickly.
Yes, to answer that question, we are doing a full 1-day workshop where we cover all of Ex-Im Bank's products and policies, and then there's also attached to that a half-day training seminar for lenders who want to become delegated authority lenders.
Okay.
Thank you. Thank you, Michael. On that note, I have a question that's written from Eric Yanu. With these workshops, do you also include how to package documents and prepare applications that satisfy some of these requirements? Will that be also included in the workshop?
The workshops themselves do not necessarily get down to that level of detail. In fact, I work with Michael as well on the internal seminars that we offer here, and what we provide there is a more expansive version of what we provided here. However, what I can offer you up is one of the benefits of the workshop is that we do build in time for participants to meet with Ex-Im Bank loan officers, operation officers, and so where there are areas where you'd like to actually kind of get into the granular, we can sit down with you and walk you through kind of the application requirements, or to this point, the documentation requirements. If you're looking for, like, how do I fill out an exporter certificate or an acquisition list, we can actually get to the people who review that information and say, this is what I look for, this is what I would need you to make sure you certify to. So to the extent that the actual seminar does not get to that level, we can have sidebars that can provide that level of detail.
And just a note, that seminar is actually coming up in September 16th. Tuesday, September 16th is the date for that. And you can register for that on the Ex-Im website at exim.gov, exim.gov.
Great. Thank you very much, Michael and Kyle. Thank you. Once again, voice questions. Do we have any more voice questions? Please press *1.
There are no questions from the phones at this time.
Okay, great. We do have written questions. I have another question written here from Bipin Shah. The question is the loan for equipment only or for full project cost? Also, are loans given to startup companies?
Thank you. The loan covers the U.S. contract. It doesn't necessarily cover the entire project cost. So now, to that end, if an exporter has signed effectively a EPC contract to deliver a project of a certain size in a foreign country, and to the extent that everything except for local cost is coming from the United States, then if the borrower qualifies, yes, we could provide a loan for the entire total project cost. However, if they're sourcing from other countries or even domestically for that matter, and we're not able to do co-financing, the borrower would need to arrange financing for the other elements not eligible for Ex-Im Bank support. You know, when thinking about Ex-Im Bank financing, it is very important to always understand that we are only looking at what is being sourced from the United States. And then by extension, what is required of the exporter once they're in country to complete the project. But to that end, other costs that may be included there, it may be possible for, to build an additional facility to install the goods coming from the United States, to hook them up to the grid, to install plumbing and things. And to the extent that it's out of the exporter's contract or it's above the 30%, that would be financing that the borrower would have to secure on their own.
Okay, great. Thank you, Kyle. Next question here is from Alan Dewar. Excuse me if I mispronounced that. The question is, we sell paint manufactured in the USA to customers in Central America. We have existing customers and lines of credit to those customers. Can you please go into more detail into how we can apply to have those lines of credit financed by the Export-Import Bank? Thank you.
Thank you, Alan. I'm going to start our presentation by saying what I would recommend you to do, Alan, is contact your local regional office representative, just because they can come out to your facility, sit down with you, and walk you through all the details. That said, I'm happy to provide some information today. What we'll do, we actually have a number of insurance products. I presume that paint as a commodity would be qualified under our insurance product. And so we have a number of insurance products. We have what's called a multi-buyer product. And what that product is we look at your entire international portfolio and your experience in exporting, and we effectively pull that together and come up with a rate that you effectively would have to pay, a premium you would have to pay to insure your exports to these buyers. And then also we look at the terms you've offered them, and then we look a little bit at your buyers as well. And you fill this out, and then we look at your company and your ability to we look at your company in terms of your ability to judge, manage, or extend and manage credit. And all of this is factored into the underwriting process, and from that we would put together a multi-buyer insurance policy for you to provide export credit, effectively terms, 60, 90, 180-day terms, to your foreign buyers. But let's also say that maybe you're comfortable with the way you're doing business now, but you might maybe have one or two buyers that, let's just say, for example, you're selling to a buyer in Egypt or in the Ukraine is a great example, or perhaps Argentina a few years back, and you just want to insure that one buyer. Like the buyer itself you're comfortable with, you're not too concerned about lack of payment, but clearly the political environment is disconcerting to you. So you can also apply for what's called a single buyer policy. And that being, again, we're just going to insure that one sale to that one buyer, and you simply pay a premium based on the risk assessed for that. So we do have a number of financial products. I'm not sure exactly which one will best suit your business needs, and please, I'm not trying to defer your question to someone else, but I really do encourage as much as possible for you, I should say, to speak to our regional office people, because that's the reason they're there. I mean, Ex-Im Bank has regional offices throughout the United States, and their sole purpose is to reach out with U.S. exporters, individuals from the SME community, come to their businesses, and work with them in setting them up with an Ex-Im Bank credit insurance policy if that's what they would like to pursue.
Thank you very much, Kyle. Next question I have here is from Rizwan Ali. Where can we find the list of countries where Ex-Im can extend loans?
Very good question. Thank you very much, Rizwan. So on our website, there is a document called the Country Limitation Schedule. I believe it is located under Tools on our website. The Country Limitation Schedule lists every country recognized by the United States, and more importantly, it lists Ex-Im Bank's cover policy for those countries. So it's in alphabetical order. And so you start with the A's and you get to the Z's, and you'll see that when we look at a country, we look at a country in two sectors initially. We look at it, public sector credits, private sector credits. Public sector credits are, again, those transactions where the underlying obligor and the borrower is a sovereign entity or a public non-sovereign entity, maybe a corporation owned and operated by the state. And private sector is just that, a company that operates in the private sector. And then we go further and we subdivide the CLS into short, medium, and long-term categories. And what we're saying there is, let's take, for example, the country Ethiopia as a great example. I think in Ethiopia, Ex-Im Bank is only open short and medium term. So what we're saying is we will not extend credits in Ethiopia for a term beyond 7 years. So to that end, if you approach me with a large transaction in Ethiopia, let's say $50 million, the best we could do is repayment term within that 7-year window. Or in some countries, we're only open short term, meaning that we will only provide credits of 360 days, nothing longer. But the CLS, which is available on our website, is effectively the document that we provide that summarizes our cover policy throughout the world. And that document is updated typically on a as-needed basis, meaning we all read the news, we all see what's going on in the world, and in certain areas, obviously, where the political stability or the economic stability is becoming under question, we may update our cover policy to the point where we may actually restrict or prohibit coverage in those areas.
Kyle, this is Linda. I have a quick question. So if they go to www.exim.gov, they just put in a search CRS. Is that where it's under?
CLS. CLS.
Oh, COS. Okay.
More easily, they can go to the Tools tab. If they go to exim.gov and go to the Tools tab, We're going there now.
Yeah, sorry, we want to walk. So yes, if you go to eximbank.gov, or exim.gov, excuse me, you go to Tools. Under Tools, you will...
Country limitation schedule is the fourth.
Yes, it is.
2, 3, 4. The fifth tab down.
Yes.
Okay, so CLS. I'm sorry, CLS.
Yeah, CLS.
Okay, great. Thank you. Next question I have here.
Oh, Linda, one second.
Yeah.
One thing I want to mention as well. I apologize for interjecting. With respect to our insurance products, I mean, again, we do have a regional office, but also Exim Bank uses a network of private sector brokers as well. We are a very large provider of export credit insurance to the U.S. marketplace, and so there are a number of brokers that broker policies, both for Exim Bank as well as other insurance carriers such as Zurich and AIG, but we utilize them as well to help facilitate export transactions. And also, we say the broker should not charge for the services. We pay the brokers to provide the services to the small business community. So I do want to encourage individuals, there are, on that same Tools tab toward the bottom, you'll see a thing for brokers. And we do encourage people to reach out to our brokers as well if they're unable to obviously get an appointment with the regional office.
Okay, great resource. Thank you. Next question I have here is from Bipin Shah. Can startup companies qualify for Exim Bank loans?
The short answer is no, because again, generally to make a loan through Exim Bank or to obtain a loan through Exim Bank, we do want the foreign borrower to demonstrate operating history. That being, minimally 3 years financial statements so they can show historic cash flows and things of that nature. However, it is not that we have not assisted startup companies. Ultimately, what we've been able to do is, oftentimes the startup company, perhaps, their local bank may guarantee the loan for them. Where their local bank doesn't want to extend the loan because of a variety of reasons, they're willing to provide a guarantee to Exim Bank that their customer will repay the loan. And we've seen this in a number of marketplaces where either startup companies or, more importantly, companies that are purchasing an asset well beyond their balance sheet has leveraged their local bank to provide support, thus allowing them to access Exim Bank financing.
Great, thank you. Okay, so let's one more and last time. Those who have a voice question, please ask it now that we still have a couple more minutes. And also, if you still have a written question, please write that in. We can always get to that as well. So I'll give it to the operator for one last final time.
There are no questions from the phones at this time.
Okay, thank you. There are no written questions, so we will conclude this webinar. Everyone, we are concluding this webinar, and I would just like to thank our main speakers, Michael Jackson and Mr. Kyle Jackson, of course, for his time and expertise on this topic. Also, please check out our website, Global Markets website at www.export.gov for more information on webinars. I'd also like to thank all of our participants for joining us, and please check your email boxes for more information on upcoming webinars. This concludes our third and final webinar for the Export-Import Bank series. So thank you, everybody, and goodbye.
Thank you, Linda.
Thank you, Linda.
Thank you, Michael. Thanks, Kyle.
Welcome.
That concludes today's conference. Please disconnect at this time.